January 2nd, 2026, and today I'm going to talk about something that could completely change how you look at the silver market. There is a shocking 5% price disparity between silver traded in Shanghai and silver traded in New York, and this gap could be signaling something much bigger happening beneath the surface. This isn't just about industrial demand, it's also about growing consumer and investor demand in China that's putting serious pressure on the silver market. I used to only be able to access this pricing data through my phone, but I recently found a website that provides real-time prices for metals traded in Shanghai. The website is entirely in Chinese, but you can easily use Google Translate to read it in English. It's what's shown on the screen right now, just set on a loop for example purposes. I'll leave the link in the description below so you can explore it yourself, and from time to time the link may change, so I'll do my best to keep it updated. When you open the site, you'll see a table that contains several columns of information related to metals trading in Shanghai. The first column lists the metals being traded along with pricing labels for certain futures contracts. The second column shows the bidding prices, which represent what buyers are willing to pay. The third column displays the asking prices, which represent what buyers are willing to pay. The fourth column shows the daily highs and lows of the asking prices, giving you an idea of intraday price movement. The upper half of the pricing data is quoted in Chinese yuan per gram. The lower half of the table converts those prices into US dollars per troy ounce. At the far end of the table, there is a column showing the exchange rate, which tells you how many Chinese yuan you get for $1 US. One important thing to keep in mind is how price movement is color-coded on this site. When prices are moving higher, the numbers appear in red. When prices are moving lower, the numbers appear in green. This is the opposite of what most Western traders are used to, but in Chinese culture, red is associated with prosperity and good fortune. So when using this site, remember that red means prices are going up and green means prices are going down. Another thing you'll notice is that during every trading day, prices tend to move very little between around noon and 1 p.m. local time. This is because traders in China take their midday break very seriously. So if you see prices barely moving during that hour, there's no need to panic, as trading activity usually picks back up afterwards. Now let's talk about the actual price difference in paper silver between Shanghai and New York. The bidding price for paper silver in Shanghai is 17.559 yuan, and the asking price is 17.609 yuan. To convert this into US dollars per troy ounce, we multiply by 31.1 grams per ounce and then divide by the exchange rate, which I'm using as 6.97. That gives us a paper silver price in Shanghai of roughly $784.60 per ounce. When we compare that to the COMEX price in New York, which is around $748 per ounce, we can see that Shanghai is trading more than 5% higher. If you want to buy physical silver in China, specifically 1 kilogram bars, you have to pay a premium of about 1.7% over the spot price. If you sell that silver back, the buyback premium is around 1.2%. When we factor in these premiums and take the average, the effective price of physical silver in China comes out to approximately $84.93 per ounce. That is significantly higher than the price of silver in New York. This type of price disparity is not normal. For the past 10 days, paper silver prices in Shanghai have been averaging roughly 6% higher than prices on COMEX. What's even more interesting is that we do not see the same behavior in gold. If you run the same calculation for paper gold in China and convert it to US dollars per troy ounce, the price is actually lower than COMEX. The elevated premiums on physical silver and the persistent price gap between the paper markets are a genuine reflection of tightening supply. This data strongly suggests that silver is becoming increasingly scarce, particularly in China. This is not a short-term anomaly, and it's something every silver investor should be paying close attention to.